All right, welcome to the Explainer. Today, we're diving deep into a stock that's been making some serious waves, CoreWeave. I mean, this thing has been on an absolute tear, and then a terrifying drop, all in just a few months. So we're going to dig into the technicals and figure out what is really going on here. Okay, let's just get straight to it. When you look at how this stock has been behaving lately, you kind of have to ask yourself, is this thing a rocket ship heading for the moon, or is it a wild roller coaster that's just giving everyone whiplash? And this timeline, wow, it just perfectly shows the insane swings we're talking about. I mean, look at this. It started out strong back in July, then completely fell off a cliff in August. We're talking a more than 40% drop. But then, out of nowhere, it stages this unbelievable comeback, rocketing to a brand new all-time high just a little while ago before pulling back again. It has been nothing short of pure chaos. So, to try and make sense of all this madness, we're going to approach this whole analysis like a doctor's checkup. Think of CoreWeave as our patient, and, well, this patient is showing some pretty extreme signs of stress and excitement. So let's get our charts out and figure out what's really going on. Okay, first things first, in any checkup, right, we have to check the vital signs. And in the world of stocks, the two most important vitals are always going to be price, what people are actually willing to pay for it, and volume, which tells us just how many shares are changing hands.
Now, this is where it gets really interesting. The story the volume tells us here is just, well, it's fascinating. On a normal, kind of quiet day, you might see something like 12 million shares get traded. But on one of these crazy high volatility days, that number can absolutely explode to over 71 million shares. And look, that's not just everyday investors. That is a classic sign of the big guns, the massive institutional players driving all the action with both their panic and their excitement. And even with all that panic selling we saw back in August, just look at the sheer strength of this recovery. From its absolute low point to that recent high, the stock pulled off a massive 81% comeback. I mean, think about that. That kind of rebound just doesn't happen without some serious buying interest. It tells you that underneath all the turbulence, there's some incredible underlying demand for this stock. So what we've got here are some really conflicting vitals, right? On one hand, extreme volatility. On the other, incredible strength. To really get what's going on, we've got to go deeper. It's time to bring out the specialist's diagnostic toolkit and take a look under the hood. Okay, the first tool we're going to grab is the moving average. And here's a simple way to think about it. If the daily price is like taking the patient's temperature every single day, the moving average is like their average temperature over the last couple of weeks. It basically smooths out all those daily fever spikes and chills so we can see the real underlying health trend. And what this is showing us is actually a very positive sign. You can see that even after that recent dip, the current price is still trading above both its 20-day and its 100-day averages. So what does that tell us? It means that despite all the short-term noise and drama, the bigger picture, the medium and long-term health trends, are still pointing up. All right, next up in our toolkit, momentum indicators. So if the moving averages are checking the patient's overall health, you can think of these indicators as a kind of stress test. They measure the speed and the strength of the price moves, which basically tells us if our patient is still running strong or if they're starting to get a little exhausted. And here's where the diagnosis gets a little tricky. The lab results are back, and honestly, they're sending some really mixed signals. On one side, you have indicators like the ADX and Arun, and they're both confirming, yep, the uptrend is very strong. But at the exact same time, other tools like the MACD are showing that the upward momentum is actually slowing down. And the Chaikin oscillator, that's actually flashing a bearish signal, which points to selling pressure. Okay, so we've checked the vitals, we've run all the lab tests. Now for the big moment. What is the official diagnosis for our patient, CoreWeave? This one quote from the analysis we're looking at, it just sums it all up perfectly. It really captures that central conflict in all the data we're seeing. The engine is still powerful, the trend is still up, but it feels like the driver might be taking their foot off the gas a little. So let's just translate that into plain English. Imagine our patient, CoreWeave, just ran a huge sprint. That was that incredible 81% rally. Now they're winded, they're stopping to catch their breath, and their heart rate is coming back down. That's the weakening momentum. But their fundamental health, the underlying uptrend, that's still totally solid. And this number right here is absolutely crucial. It comes from a fancy statistical measure called R-squared, but it basically just asks a simple question. How predictable is this stock? And for CoreWeave, the answer is, well, only about 4%. That confirms what we've been seeing. This stock is not moving in a nice, neat, straight line. Nope, its path is being driven almost entirely by short-term feelings, by market sentiment, and by that wild volatility.
Right. And because its path is so darn unpredictable, we can't just draw a straight line and say it's going here. It doesn't work that way. So, what's the prognosis? Well, let's look at 3 possible futures for our patient, all based on the key price levels that are about to become the next major battlegrounds for the buyers and the sellers. And this table here lays out that battlefield perfectly. Up top, you've got the price ceiling, what analysts call resistance, at that recent high. That is the number the bulls absolutely have to break through. Then down below, we've got the immediate price floor, or support, sitting right around the $137 mark. And if that level breaks, well, there's a much stronger safety net, a support zone, built on a ton of trading volume, way down closer to 125. So all of this really gives us 3 main possibilities, 3 likely scenarios. First, you have the bullish case. Buyers jump in, they see this little dip as a fantastic opportunity, and they push the stock right back up to challenge that high. Then there's the sideways scenario. The stock just chills out for a bit. It takes a breather, trades back and forth in a range, and just digests all these recent crazy moves. And finally, the bearish case. The profit-taking continues, the selling keeps up, and the price drops down to test those lower support levels we just talked about. And that brings us to the final and really the most important question, doesn't it? This recent pullback we're seeing, is this just a healthy pause in what's still a really powerful uptrend? Is the stock just catching its breath before the next big run-up? Or is this the first sign of a real fever setting in, the very beginning of a much deeper, more painful correction? The answer is going to be revealed by which of those key levels we just saw holds or breaks. That's what you got to watch.